TJ the Wheel Deal coming at you live. It is another episode of Wheelers, or in this case, Wheeler, because nobody's click the stream yet, guys. No, I'm flying solo right now. We're waiting on the other folks. But anyway, how's everybody doing? We're just chilling right now. I'm trying to get everything situated. So hopefully we can get things rocking and rolling soon. But not having any luck on the background. You guys can't see. But I'm not having any luck logging on to Robinhood. Keep saying something went wrong. Something went wrong. Something went wrong. As long as it doesn't say money all gone, right? Because then we can have a serious problem. Anyway, how's everybody doing, man? How's everybody doing? How's y'all's portfolio doing? Are y'all dealing with covered calls gone wild? What's going on? Anyway, so we got an episode of Wheelers officially now. We've got Bill White, the Excel wizard, and we've got Jin Park, a new addition to the show. How are you, Jen?
Good, good. How are you? It's first time being live.
Well, anybody's going to do better than me, so welcome.
Welcome.
Anyway, let's do some introductions. Hugo's going to be joining us today. I shot the email over to Dallas Matthews. Works, so I'm not sure if he'll be joining us or not. But tell us a little bit about yourself, Jen. How long you've been investing, and how long you've been following our little camp?
I've actually just started this year, around March. So I'm not even a beginner. I would say I'm more of an infant investor. And I have actually started to follow your channel about 2 months ago after seeing Amit's channel.
Okay.
And I find your strategy very interesting, because that's something that I've never really kind of know about. And I really appreciate all the sort of the insights and tips and tricks that you kind of share. So yeah.
Well, awesome. Well, welcome. Today's going to be a fun episode because we're going to go over a lot of reasoning, a lot of thought behind why I decided to exit, 60, 70% of the Palantir position, and really more so restructuring the position, I think is more appropriate terminology. But before we get into that, Bill, how's everything going with you?
Good, man. It's been real busy. Trying to truck along and reach that early retirement age, just plugging along day by day.
Did you use the pro tip on putting your daughter to sleep?
No, I will try that one out next time, though.
I told him to talk to her about options and put my wife to sleep every day. So, it's like Benadryl, bro. Or what's that, melatonin? Is that the one that people use to go to sleep?
Yeah.
What up, bodybuilder in the house? Jesus follower extraordinaire, exploring your options. Dallas Matthew, how are you?
I'm awesome.
Your portfolio is going awesome. Fucking crypto junkie, really working out for you.
Yeah, it just feels so good for like the plan to play out, because the past couple months has been just a hard hold, but I mean, a couple months ago on this pod, I gave like 20 reasons like why crypto should be at this level at this time.
Right.
And it just feels good to have that play out. I have nothing to do with it. It's just like, kind of
you did the homework.
Stars aligning and just putting yourself in position to take advantage of that.
Has it gotten? Are you comfortable with the idea of winning big? Because it took me years. This is a little teaching segment before we get into the meat and potatoes today. It took me years to get comfortable with the notion that it's okay to make a lot of money, even though you don't directly work at these companies. And I'm talking to y'all about a little mindset action for those of y'all, both of y'all, probably all three of y'all still have regular jobs, right? Yeah, I'm assuming you have a regular job, Jim.
Yes.
We are conditioned as kids to work for money. We are not conditioned unless you're like the 1%. You were raised by the 1% or the 3% that owns 97% of the wealth in this country. You know, it's a think and grow rich principle. We're not conditioned to put our money to work for us. We are conditioned to trade hours for dollars in this country as from little kids, right? They go get the good grade so you can advance in school, and then you advance in school, you can go to a good college, you do that, you get the good job, and you climb up the proverbial corporate ladder. That is the bullshit that is sold in this country. Year after year after year after year, they want you to work a mediocre job for 40 years so you can retire to a Seiko watch. You know what I mean? Like that is literally the shit that they teach and preach in this country through the educational system. So whenever you stumble upon the way that I did, I stumbled upon selling options. And then you figure out, hey, there's like a legitimate way to put my money to work. It kind of goes against the grain and all of the conditioning that's been in the brain from very early on in life. Chaz N, welcome to Wheelers. How are you?
Good, man. How are you?
I'm doing well. Tell us a little bit about yourself and how long have you been following the channel and what inspired you to click the link today?
I don't know, man. Just been an investor for a while, trader, however you want to spin it, I guess. I've been following your channel for maybe a couple months. I got to know you through Amit's stream, and I feel like I'm usually like 30 minutes in the morning. I'll watch Amit's channel, and sometimes I'll tune into yours. And I feel like every time I catch your channel, it's like, 1 more million. So.
It's crazy.
Mad respect. I'm slowly climbing, up, trying to learn, trying to execute some cash secured puts and covered calls and stuff. But I feel like I just don't have the time to kind of feels like peanuts sometimes. It's like, oh, should I really, make $50 and risk like selling my shares for a certain strike? So I don't kind of do it as much. But maybe for positions like yours, if you have thousands of shares, it makes more sense to kind of sell like 10 calls or 15 or 20 calls. So
yeah, I think I equate it to like real estate. Whenever you look at one house, you pay $250,000 for it, or whether you paid for it in cash, which I highly don't recommend doing if you're doing the real estate game. You want to control $250,000 with maybe $40,000 or $50,000 in cash, and then you're using your credit and whatnot, leverage, and then you're hoping to try to cash flow $200 or $300 a month on that door. It doesn't sound that exciting whenever you look at it in those terms. That's why real estate doesn't appeal to me. But if you have thousands of those doors, it's a different game. You know what I mean? So, like, to me, the big thing with me is share accumulation, because that little 3% on $1,000 doesn't feel like a lot, because that's only like $30.
Right.
But on $10,000, $100,000, it's different. It's the same percent, but that dollar amount hits a little different.
It does, yeah. Absolutely.
So we're all playing the same game. It's just like I equate it to like Little League when you're playing Pee Wee football, Pop Warner, and all that stuff, and then the NFL. It's the same game. It's just played at different levels because people have devoted their time. They were blessed with talent and skills and all that stuff to be able to pursue their childhood dreams. So anyway, let's get started. I say we get started with the meat and potatoes of this thing. If y'all have been following the channel, y'all know that I made a very difficult decision this week, and that was selling 20,000 shares of our Palantir position on purpose because I wanted and needed mathematically to restructure the position. So I want to call it restructuring the position versus selling off. So I want to, by show of hands, how many people are familiar with the trade already, with like what I had going on with Palantir? Okay, so essentially, let me see if I can pull it up real quickly. Let me cue it up first. So we got Palantir. So Palantir has been an absolute positive pain in the ass for probably the better part of a year now. Right? Like it's been on this run for a pretty hot minute. So I got out of my emotions because I'm long and strong Palantir. Out of my emotions, and I was like, it was just an aha moment. I was looking at there's someone else I think on the background. I'm not sure. Let me see. Okay, no. I had the screen open. I just had the screen open. I think I was studying for the Series 65 or something like that, but I always have the screen in the background to see if any notifications pop up or whatever if I don't have my phone handy. And then all of a sudden the Palantir position like started speaking to me. It was weird. And I was just like, okay, I'm making all of this money on paper off the shares, but I'm losing all of this money on the covered calls. If this thing goes to 100, I'm going to participate to the tune of maybe another $2,000 or $3,000 to the good when it's all said and done. But I can't liquidate anyway until January of 2026. How can I restructure this position so that I still feel like a winner? Like, is there anything that I could do mathematically? So essentially what I did is I literally took a step back. And literally, this is what I did. This is how it played out. I was on the desk and I was like this. I was like this, and I was looking at it because when I stand up and I walk around, I think better for some weird reason. Like I'm a pacer on the phone. And I was like, okay, if I was entering into this position brand new today, how would I do it? Would I be comfortable buying shares right here because I feel like it's overvalued? So that's why I went underpriced, overpriced, or whatever on the thumbnail today. I go, no, so that's out. I'm not interested in buying any more shares. I stopped being interested in buying shares in that $35 to $40 range. I think that was the last time that I bought 500 shares. So I'm not interested in doing that. So what can I do? Like, how can I do it? I was like, well, I would like to control the most amount of shares for the least amount of money. So leaps was the only way that I would be willing to enter a position, but very small. Because I feel like if it's overvalued, I'm not going to get a good deal on the leaps right now. But I'm not willing to just buy leaps and hope that it runs because I kind of think that it's going to go down. But I've been thinking that for a year now. So there's that. So let me just buy the leaps, sell the cover calls on those, manage those because it's so overextended right now. I feel like cover calls at these levels are a lot easier to manage than at the $20 and $30 range. So I had that going for me on my side, right, psychologically. So I was like, well, let me buy 25. And then I was like, no, let me buy 50. And then I started selling cover calls against those. And then the next day I was like, I think what I'm going to do is I'm going to stay long 4,000 shares because I have cover calls against those shares at 45 for January 2026, still very manageable. And I'm going to get rid of all of the other ones. I'm going to buy to close the cover calls and immediately sell the shares. So I want to free up a lot of capital. That way, if Palantir runs up, we'll let it run up. The 50 cover calls, the 50 leaps are going to print. I can still manage the cover calls, the $45 cover calls. So I feel like I'll win a lot more than what the entire position will do for me now. Because if it goes up to 100, I'm only qualified for like another $3,000 total. I didn't want to do that. And then I also didn't want to ride Palantir back down to like $30. Because I'm like, at this point, I have no upside, but I have all the downside. I was like, why don't I eliminate a lot of that downside and have the money on the sidelines ready to rebuy the entire position in that $30 range if the market were to give us that? It's kind of like wishful thinking. It's hopium. It's all of those things. But then what made the position easier for me to navigate was that there was another company that gunned to my head at the levels that they were those days. I would rather that money be over there than in Palantir, and that was Amazon. So I would love to have 10,000 shares of Amazon and just sleep like this. I won't bring as much premium through the door, but I'll take some volatility out of the portfolio because preservation of capital started becoming a thing here recently as the portfolio started climbing. I don't want to be the guy that we had a $10 million portfolio, and now we have 6 because I played like a fucking idiot. I don't want to be that guy either. So I learned some things about myself here recently that I don't want to be the guy that used to have X on the portfolio. I want to know how to preserve that amount and position myself to maybe not win as much, but not lose as big either. So those are the things that I learned about myself. And so let me walk out to that position, and then I like to get y'all's honest feedback. So there's 3 or 4 things that I know that I could have done differently along the way. And I'm going to tell y'all what those things are, and then I want to get y'all's feedback. So it started over here where I bought the 25 contracts. And again, I'm buying these thinking that this is the shittiest deal in town. Like, I don't know if you've ever made a purchase on a personal level or a small business level, and you're like buying something and you know you're getting ripped off, kind of like toilet paper during COVID, something like that, where they like just, you totally inflated the prices on this shit and it was crazy. So that's kind of the way that I felt here. It was like trying to buy the wipes for your hands and the Clorox wipes and toilet paper during COVID. I just felt like I was totally overpaying for these things. But I'm like, well, let me fork out 52 grand, collect premium on the covered calls, fork out another 52 grand essentially, and collect $2,600. So I get a little bit of a rebate there on the $103,000 capital outlay. And then I'm going to give back a shitload of money. I'm going to give back $240,000 in covered calls, immediately sell those shares, bring in almost $299. So that's a net positive of $58,685. So that was real easy, because if I just waited it out, I was going to get $60,000 for the shares because they were for sale at $12. So I was like, okay, so it's only costing me, it's like a payday loan advance or whatever. It's costing me like $1,300. I know that I can go make that somewhere else and be done. And then this one was a little tougher because this one was costing more like $75,000. So I paid back $446, immediately sold those shares for $894. So I freed up a lot of money because I got $894 and then I got $300. So like $1.2 million or so, whatever that is, 900, yeah, 1.2 million. But then we gave back 100 over here, so there was still 1.1 net positive in cash. And I was like, I can go sell a bunch of cash secured puts with that money while I figure it out. And then the justification was, well, if Palantir goes down, I'm in a real good spot because I can go buy those shares. I needed to go down like 30% for it to make sense from a tax perspective. If I buy these shares any sooner before that, it's just the decision to do this wouldn't make any sense, because I'm essentially just creating a big tax burden, and I'm not going to really see the benefit on the other side of things. I really need this thing to go down to like that $40 level for this to really play out in my mind. But the other thing is I could sell a bunch of cash secured puts immediately, bring $40,000, $50,000, $60,000 through the door, and now I have the money working again, and I don't have all of the downside on Palantir because I think that the stock is overextended. So those were all the things that were going through my head. Now, doing the hindsight's 2020, what did I learn? What Palantir taught me was whenever the covered calls are getting out of hand and you see no end in sight on the stock because it's just hot, like all the stars aligned, like Dallas was talking about with crypto, it's just hot. It's running for reasons that you can't even justify. You can't make sense of it, but it's going to run because everything is just picture perfect for the company and the stock. Like the sentiment aligned, the fundamentals are good, the technicals are good, everything's good. This thing's going to go up. The biggest thing that I learned was when I started DCAing 500 shares at a time, what I should have been doing was buying leaps, five to 10 leaps at a time, controlling more shares, and not sell covered calls against those leaps. And then I could just totally cheer for the stock. And I would not roll these covered calls in the distance. I would essentially say, hey, I'll get liquid a different way. Let the shares get called away, because most of the shares I'd already owned for a year anyway. So there was that was already in the bag, if you will. And then I'll just buy the leaps. And if this thing wants to print, I'll just exercise the leaps and I'll still have this position. That would have been a more capital efficient way to navigate for me. And I would probably control more shares, and I could exercise more shares because I could have been buying those leaps at the money when it was like around $30, $25 when I was doing this. Or even when I first started buying the 5,000 shares at 14, maybe that would have been an opportune time to be like, screw it, I'm going to buy like 100 of these things. I'm going to buy like 200 of these things, control a shitload more shares. Because what I also learned during this journey is it doesn't hurt me psychologically to have squatters against leaps. It hurts me psychologically to have squatters against shares because the shares cost so much. But like going back to the real estate analogy earlier, when you pay full price cash up front for the house and it's a rental, you're going to put a renter in there. That's the name of the game. But when you're controlling the house for a fraction, you can wait for the right market conditions before you start bringing in the rent because your capital outlay isn't as much. So those are the things that I learned about myself. If things hot, protect the position as soon as you can. And before, in fact, set it all up before you start selling aggressive covered calls, set it up the way that I did with SoFi and buy all of those covered calls. That way my protection's already in place. And if those covered calls get challenged, I can be in a position to be like, hey, take those shares. I'll go buy these back later on because I can't have my capital, the big capital, tied up for too long. And it's just dead money and it's no longer fetching me any rent because it's going to mess up my strategy for my hamburger stand the way that I like to run things. So anyway, essentially that's what Palantir taught me is don't be stubborn. There's better ways than just kicking the can down the road super far. There's other ways to navigate it. And if you're going to have squatters, it's just a hell of a lot easier for me psychologically to have squatters against my leaps versus the actual shares. I do not like having shares that aren't collecting a premium. I just don't like doing it. And then also the other thing that I learned, and I didn't know this about myself because I don't know if y'all know this, I haven't won this big before. This is all new to me. Follow the journey. I mean, like this isn't somebody that's been working with this kind of money very long. So I'm learning things about myself. And I learned that if there's $1 million win to be had, you should probably go ahead and cash that lottery ticket. Because you're not going to go broke doing that. It's going to be a painful tax bill, but you're not going to go broke. And I don't want to be the guy that rode the shares all the way up and then just to ride them all the way down when there's different ways to maintain the long exposure. So I got out of my feelings and I was like, hey, you can't be loyal to the Palantir crowd or anything like that. You're still long the shares. You need to navigate the position the best possible way. It's kind of like I have a job and I'm going to go to my the performance review or whatever it's called. And I need to be able to answer for the decisions that I made, so to speak. So I put that hat on and I was like, this is exactly the way to play this position right now, given everything that's happened. Anyway, Bill, let's go around. Constructive criticism, bro. Let me have it. The good, the bad, the ugly. I'm going to put my hat back because when I have my hat back, I feel like over the top. You know what I'm saying? I know I could have done things differently, but at the end of the day, if I want to grade everything, I still give myself like a C+ that I played Palantir thus far. All things considered.
It's a big win. I mean, I think you can't beat yourself up. I mean, one of the hardest things is picking a stock that goes up a lot, right? And you can never guarantee that that's going to happen. So you're trying to protect yourself from the very beginning by doing covered calls and bringing in money against those shares. You don't really know what's going to happen. I would say the math behind your decision to wait that long, to only make a few extra $1,000 is a no-brainer, especially when your bread and butter is selling cash secured puts. It is for me as well. Right. It's just a no-brainer. You can make that back in one trade and be on your way. You like you said, you probably could have done a lot of different things. You maybe could have rolled your covered calls earlier. You could have bought leaps at a different time when it was, more advantageous. I guess the critical feedback, and I understand why you did it. I don't think I would have had it in me to buy calls right now.
That
But
was the FOMO though. I had to, because if this thing's going to go to 100, bro, it's not going without me.
Yeah.
I've been in since the DPO. You know what I mean? If this bitch wants to go to $250 billion market cap, it's taking TJ the wheel deal with it, even though I think it's worth like 50 billion.
Yeah. But worst case scenario, you break even. I think I did the math. I was 65, and so you're at $85, $86 break even for January 2027.
Yeah.
Worst shit can happen. I think you just you're in a situation where I think you're doing the right. Having done that, I think you have to go and get some of that premium back, and that's what you're doing. You're selling the covered calls against those leaps now. So nothing too critical on my end. I think the math told you what to do, and I just maybe wouldn't have bought the leaps, but I get why you did. So.
Yeah, because I can't make sense of the price action, and I haven't been able to since it was about 20. And hell, even when it was 14, dude, I can roll the tape. We need to get better with this artificial intelligence and go tell whoever the hell this Claude thing or whatever it's called, go find where I was buying those shares at 14, and I didn't think it was a good deal. I thought it was even a worse deal than buying the damn leaps the other day.
Yeah, I was here with you, and I was telling you to roll your covered calls back then. I was like, we had the conversation, but it is what it is. You still had a big win, and you can't beat yourself up over it.
Yeah. What about you, Jin? I know that you're a little newer to this thing, but what do you take from that soliloquy on my Palantir situation?
If I were in your shoes, I'll be very happy that I have that much money, but apart from that, if I were you, I would have done the same. And that's because, I've done a lot of business where you acquire a lot of assets through assets. And you always want to think about, spending the least amount of, I would say, capital to gain the most amount of capital. And in your position, I think the market condition right now is very, very open, and there's a lot more opportunities. Especially when you mentioned the Amazon, I think it definitely is. It could be a better sort of a choice for sure. But none of us have the crystal ball in front of us when Palantir is gonna go up even more, or is it gonna crash, or is it gonna correct itself? Nobody knows. I think I truly believe it's a nice sort of a decision that you made. And so I don't really see any, I would say, criticisms to it. For me, I only hold 100 shares of Palantir, but I have been buying the more shares I kind of wanted to buy. I sort of opted to actually just buy calls at a lower price before it started to go up, and then I started to see that kind of build its profit as well. So that's. I think it's the least amount of asset that you put in, and then to bring in the most profit. I think that's the smartest idea, and then freeing up your asset to actually to do better work. So I would say good job.
Awesome. Let me address this question real quickly, and then I'd like Dallas to chime in because he does have a wealth of experience selling options. Muted is saying, why not sell at the money calls on Palantir instead of outright selling? Good question, because I gave back too much in premium, and if the shares came tumbling down, I would be an idiot twice. I would be an idiot twice. I couldn't do it mathematically, because to potentially lose all the share price appreciation on top of having my ass handed to me on a silver platter on the covered calls, there's no way that I'll take one L, but I ain't taking both, yo. You know what I mean? Like, I just can't do it. So the minute I decided to take that L on the covered calls, I have to log in the win on the shares at those levels. If we're talking 40, 50 grand, I might be singing a different song on the same radio station. So I think that's where everything is so situational. And my answer for everything, when people always say, what do you do X, Y, and Z, A, B, C, 1, 2, 3, my answer is always, it depends. it depends, because one thing that I have learned going into year 5 of doing this full time and creating this little TJ the Wheel deal that you guys see here is that this thing truly is a tailor-made suit, and the measurements are changing on a daily basis, man. Like, this is not the last time I sold at 30 Delta, I'm golden. It was below the, it was at the higher end of the Bollinger Band. I sold outside on the cover call. The 200 day was protecting me. Dude, all that shit works until it does. So anyway, Dallas, chime in, my man. I'd love to get your feedback on this thing, because this is not a decision that I made lightly, dude. I put a lot of thought into this thing. Because I go on a mid channel on Friday, bro. Whoa, there's gonna be like 2,000 Palantars trying to nail me to the cross, So there was all those things to consider as well, emotional.
So how much dollar? What's the dollar amount that you paid for the calls? For the leaps?
Sure. For the leaps, 103 grand.
103 grand.
Yeah.
I mean, so. I like you locking in the win, because like you mentioned, you weren't actually making too much money, as the stock continued to go up. So I like locking in the win. I don't like the timing right now of buying the calls. I would prefer, like, one thing I use for like a bare minimum entry point is like a 20-day moving average. That's something where when we're in a trending market, a lot of times you'll see it come hit the 20-day, or some people like the 21 exponential moving average. That tends to be like in a trending market, kind of like the just sort of take a breather type of price action. So I would have preferred at least waiting for something like that, because I mean, I guess it all depends on your market outlook, because I think at these levels, if the overall market comes down a little bit, then Palantir is probably going to come down a good bit. But I don't see a way for, even how expensive it is right now, if the overall markets are performing well, I don't see Palantir selling off at all. Maybe a day or two, but it's going to keep getting bought up as long as the overall market's up. So I think the sort of position sizing is what you did well. Because it's not a large position size for you. So that will enable you to be wrong, possibly. If you're right, it's great. If you're wrong, you don't take a big hit. And then as Palantir goes down, then you'll really be able to size up. So I don't necessarily love the entry point, but I understand your thought process behind it. And I like the fact that you didn't go, heavy into the calls.
Yeah, I was only going to buy 25, but then I was like, dude, this thing was a 2-week trade and it already brought in 6. The premiums are real inflated on the covered call side right now. I was like, if I just do 3 or 4 of these rounds, I'm going to bring in like a fourth of this money. And that can kind of like right that wrong right there, if that makes sense. Because I do not think I got a good deal by any stretch on the, I would be pleasantly surprised if I make any money on those long calls, and my saving grace now is what's been a thorn on my side, which is the cover call premiums are so damn juicy. And I'm like, I only have to bring in 100 to be playing with house money on that aspect of it. But if on the off chance that this thing moons, because they're talking about like some contracts paying them like 98 million a year or some shit. I mean, this thing just keeps hitting, dude. Like they're playing like a game of whack-a-mole, and anytime one of these things comes up, it's hitting it on the head. You know what I mean? Like it's just clicking on all cylinders. I'm like, dude, I'll gladly lose another 2,000 or 3,000 on covered calls, and I'm just gonna kick back and let the thing happen. Because the sentiment, dude, it's a real thing, like shit can get euphoric, and then I think, well, they just joined the S&P 500. Palantir is new to a lot of people, a lot of institutions with really big wallets, really deep. I don't know, dude. It's just an anomaly for me. I've never been in this situation. That's the thing, So I'm learning a lot about me and just being in these predicaments. I'm just like, dude, this is tough. But am I really going to be like, oh, the Palantir cape is on and I got a tattoo on my ass, and no matter what happens, I'm going to ride these shares for the next 5 to 10 years? Or why don't I just position because it's kind of like rolling, right? I essentially just rolled the entire position into something that I sleep better at night and I still have major upside from here. Although I don't think that is supposed to happen. I didn't think any of this was going to happen either. It wasn't that long ago that this thing was like at 35 or 40 bucks.
I know.
I'm just saying, do people have very short memories when the market's very euphoric like this?
Yeah, it's right now. I mean, as long as we continue to stay in this market, it's like Bitcoin's the same thing. Like you're seeing these giant candles, and like every dip is getting bought right now, and like it's just gonna, take breathing points and then keep going higher. So it's not a bad move. It's just depends how you look at it.
Yeah, no, for sure.
I'll say this, TJ.
Yeah.
I think
I mean, I'd love to get your feedback.
my 2 cents. Like back in 2019, I think when somebody showed me how to like generate money from whatever shares you have. I gave away my AMD shares for I think $45 on a covered call, and that if not a month goes by where I think like it's like what 200 almost touched 200 couple times. So
yeah,
don't do that to yourself.
Yeah, I know, but one of those things. But I'll say this, like, I think you getting rid of it, like, I look at it as like opportunity cost and the fact that it saves you thinking and like, you go to bed and you lay down, you're like, oh, what should I do with these damn covered calls that are in the money, right? So it just kind of frees up your mind a little bit to think of other opportunities and maybe other entry points down the line. So
that's a really good point, Chaz, because now that it happened, what I haven't thought about at all was that $12 cover call or those $35 cover calls. I honestly did, like, I pulled the trigger, and then now I was like, I looked at my board, right? I have the board back there, and I'll go here just real quickly. So the board is my 5, right? So it's like SoFi, Riot, Amazon, PayPal, Tesla. And then my other 5 is Palantir, Intel, Hood. And then everything else is Enphase, Boeing, Celsius, Archer, TSLL, BITX, SOXL, Joby, and then NEO. Those are all the cash grab stocks for me. So I was like, dude, I can go make a shitload of money over there. I'm comfortable pretty much in all of those. And now I got the money working again. So the juices are flowing. And then now I was like, ever since I did this, because life is causing effect, right? This happened. I got that cover call that I'm excited about. It's not a real big thorn on my side. I got 100 cash secured puts at 28 on SOXL. I got 100 cash secured puts on Celsius at 25 for 12.13. I've got the 50 cash secured puts on Hood at $30. I got 200 cash secured puts on Intel because I had a 3-hour conversation with somebody at Intel. And I was like, dude, they're going to be okay. So I'm excited, but not at 24. We're at like 20, but this is the setup trade, if you will. And then I'm still babysitting these cover calls on PayPal. And then I've got 400 more cash secured puts on Riot. These are all new positions that I didn't have before. And then now I've got the stuff that's bigger in the distance. So all of this happened because I freed up all of that money. And then also what happened is that buying power is insane, and I'm sitting on a shitload of cash. So if this thing wants to crash, I've never been more prepared to go buy the dip on some of my favorite companies. So it just changed the way the hamburger stand looks at things. You know what I mean? I was like, dude, the market gave me this opportunity. Thank you, Palantir, specifically. But my God, like, I feel like the hamburger stand is more prepared to win and set up to win and handle a downturn. Because if like Amazon were to go to like 180 or something crazy on a major or, kind of a decent pullback in the market, I would love to go hide another $1 million over there on Amazon. And just push comes to shove, I was just like, you just have one. I'm always playing that little scenario. I don't know if y'all do these crazy things or if it's just me. But like then in my head, I can only own one right now in the portfolio, all things that we know. Like right now, it's not even Tesla for me, it's Amazon. Like if I could just own one, I got to wake up in 3 years and I got to be pretty close to a 50, 60% return from where we're at right now. I feel like Amazon's going to give that to me.
I feel the same way. Like
So
it's more.
why isn't the portfolio reflecting that conviction? You follow me? So that's the thing. Go ahead, Bill. Sorry.
No, I agree with you. I'm actually building an Amazon position as well. And it's been one of those things where I've slowly kind of built it. And, as I've been taking gains, I've been kind of dumping it there. We're kind of doing the same thing. What's weird is I don't get overly excited about Amazon, but I also just know that it's going to go up over time. And, unlike Tesla, where what I really like about Tesla is trading Tesla because it's volatility. It's just like it's all over the place. So I can manage it, but you're not going to get that with Amazon. It's just not going to happen, and it takes a lot of the volatility out of the portfolio, and it just kind of lets you you can be more aggressive with the funds that you have available to yourself if you just kind of have a rock sitting there that's going to slowly go up over time.
For sure. Anything you like to add?
Big Amazon believer. That's my biggest position.
That's my biggest
yeah. Yeah. I've had it for about 7 years.
So I think the other thing that helped make this decision for me was the wheel tracker. Because I look at this all the time. Like, to me, this is more soothing than just staring at the portfolio. I'm like, is there anything here that just jumps out at me? And the one thing that always seems to jump out at me is the premium income and where it's coming from. And this thing has been suggesting for a while that the cash secured puts is my bread and butter. That's just the way that it has been. If I look at total call premiums and if I look at total put premiums, you're going to see that on the call premiums, like if we look at number 67 there, I'm going to try to make these just a little bit bigger. You're going to see that there's a lot of parentheses there. That means that either I lost money on covered calls, or the premiums that I paid for long calls exceed the covered call premium that was taken in. So that is the case on TSLL. That's the case on Hood. That's the case on BITX. That is definitely the case on PayPal. Definitely the case on Neo. And holy cow, definitely the case on Palantir. To the tune of $715,000, even managed somehow to lose $148 on NVIDIA on covered calls or something. It had to be covered calls because I don't have any long calls there. 9,100 on CrowdStrike and other. So a total of $750,000 to the no bueno, even after subtracting all of the covered call premiums, because I have bought a lot of leaps over the last year. But then now if I look at the put premiums, I don't know if is it row, is it column? I don't know what this is called. So line 72, is it row or column, Bill? When you go horizontal.
Row.
Okay, so row 72, the total put premiums. I see Amazon 10,000 to the good, Intel 22,000 to the good, CleanSpark 261,600 to the good. Don't own one fucking share. I love it. Even Poop Phase got 99,000 on the put. TSLO, a cool 464,000. Hood, 57,000. BITX, 26. SoFi, 367. Managed to lose 13,000 on Open Door because I suck. PayPal, 38. Neo, 25. Neo, bro. Even Neo is winning on the puts. Tesla, 70,000. Y'all see a trend here. 114 on Palantir, 12,000 on NVIDIA, a cool 500,000 on fucking Riot, bro. I mean, seriously, dude. Let me put on the hat. I didn't know it was that good. Let me go here. 495. CrowdStrike, 3,200. American Airlines, 14,000, and another 500,000 almost. So 2.5 million to the bueno on covered calls versus 771,000 to the no bueno. I'm sorry, on puts versus 771 no bueno on the covered calls. So to me, the numbers told me that I need to have more cash to go play to my strengths. Like I'm a basketball player that can't do anything with the left hand because I'm right-handed, but I keep trying to score with the left hand. But if I'm able to score with the right hand, well, why not just go do that?
Hey, TJ, there might be a second lesson, and I'm saying this for myself as well, because we have the same problem. We don't like squatters. Is it also telling you that we shouldn't be selling covered calls?
That's a good question, dude. It's a good question. I think that the lesson is bigger, though, for me. The lesson is, why not just let the shares get called away? I think the lesson for me is don't sell covered calls unless you have leaps in play already. Because, dude, let's just look at, again, dude, this is when you're really willing to evaluate the situation objectively. A lot of shit is so obvious, dude, and this game is not that hard. We just make it that way because we're emotional creatures. But, dude, I have situations here with SoFi where cover calls are getting challenged and it causes zero freaking stress because the position is just set up properly. You know, I've got the shares, they're performing, and I got covered calls, 2,000 of them at 15, dude, for March and for January of next year, not causing any stress whatsoever because there's 200 calls, long calls, 7 of them for January 26, 200 of them at 5, 500 at 10, and 500 at 15. So I don't think the nemesis is covered calls. I think the nemesis is poor portfolio management, and there's a flaw in the strategy because I have been selling this notion to my mind for 4 years that you're going to be the casino and not the gambler. But the people that started the casino, they took a big fucking gamble doing that, didn't they? So I feel like you kind of have to be able to toggle that line a little bit. And if we're ultimately bullish on these shares, isn't leaps a better use of capital than just buying the shares outright? Because you're getting, because you're controlling the shares, you could sell potentially calls against those, and then they're going to ride up, and you make a lot more money on less of an out-of-pocket investment. So I think to me, that's the biggest lesson. What do you think, Dallas? What do you think about this idea of if you don't have it in you to have squatters because it's something in your DNA that doesn't like that, you don't like the way that it feels? These are non-dividend paying stocks specifically that I'm talking about. There's a lot of big wheelers on YouTube that are like, you don't want to own those shares. Buy leaps on those shares or buy leaps on those companies, but you don't want to own them. It's not a capital efficient strategy. David Jaffe being one of them. This other gentleman named Perez, who's like, he never owns shares if the stock doesn't pay a dividend. He always just buys the leaps and runs the poor man covered call campaign that way.
Yeah, I mean, I've been talking about it for a couple of weeks now. I think covered calls are the nemesis of most of the people on this channel, and I think unless you're wheeling for a living, and even if I was thinking about it actually the other day, I'm like, even if you are wheeling for a living, you sell that and you feel this need to sell the covered call because you need the premium. You're only collecting that one time, and if it goes against you, then you're no longer living off of that premium. So it still doesn't make sense to just have them on all the time. And I mean, like, I've been a lot more disciplined. I mean, I was able to sell a call on Amazon today at $225 for a month out, and like that felt really good. RSI is over 70 on Amazon today, and so that to me is the proper placement of like, okay, we should have a chill period probably between 210 and 225 over the next couple of weeks with Amazon. RSI is screaming at you. It was just in the high 150s back in August. And so that like felt really amazing because I was like, I wanted to sell them when it was at 200, right? Because that's a real psychological level, 200. I wanted to sell it at 205, at 210 or 210. and I was just like, you know what, 300 of my shares are locked up. I'm going to leave these 100 shares to like let them go, you know. And then even though I felt like Amazon will probably take a breather here around 200, it just hasn't. Now it's about 215, and so now just looking at the charts are like kind of screaming like perfect time to sell cover call on Amazon. And so that feels a lot better, and that feels a lot safer, you know, because you're like, okay, if I get caught on this, I'm rolling out to 230, 235, and you know by then you will catch it at some point where it's like if you sold it right there at 200 and it goes to 230, I mean, you're automatically like 7 to 8 months of rolling right then and there, and you only collected the premium one time, so you're no longer paying, you're no longer getting paid. So I just don't like the theory necessarily of always having them on, and you're probably paying back small debits sometimes along the way in order to help move your strike price up. So now, like there's some positions that I'm actually, even though I've been rolling them for so long, it's actually I've paid back enough small debits to that number is higher than the initial credit that I initially received. And so it's like that credit didn't do me any good because I've paid back more in debits now trying to roll up and out, up and out, up and out. And you know, so I just think if you don't live off the premium, which is 99.9% of these people, probably no one on this stream is living off their premium. I think you should just be very careful, very selective, and understand what company you're in, you know. Because if you make a wrong move, I've been talking about Riot for a couple months now. If you get a cover call on Riot, it's gone. Like it's now gone, and it's probably never coming back. And if you want to sell those shares next year, which you probably should, you're going to have that feeling of missing out on all that capital appreciation, and that premium will not feel so juicy anymore. So I think it's definitely great here and there, but for most people, just be selective. You know, have the discipline, because a lot of times it's just not worth it in a bull market.
Yeah, I agree.
Sometimes
Go ahead.
No, I was gonna say sometimes what I'd do is like, if I can catch a spike, you know, on a, you know, in a day, I'll go ahead and sell a covered call for a week or 2 weeks out, and I'll come back and buy it the next day after, you know, the spikes kind of normalized. So I've done that a few times just to, you know, a few $100 on your shares. I'm also, you know, very attached to my shares, so you know.
Something I came to terms with recently as well is like it's okay to actually buy back that call and then let it run up a little bit and then put the call back on. You know, like just do the math and but I know like there's nothing worse than buying back a call for a massive loss, and we feel like we need to put that new call right on, you know, immediately to get all that credit back, especially if you're someone like me who like I'm always cash light because I've just been trying to I have no cash left to put into the market. I've been putting it in over the past year, and you know, so for someone like me who's cash light right now, if I were to buy back something, you know, that would put me into margin, which would be a sucky feeling. But like it's okay to wait a month, maybe a month or two, even let that stock make its move, and then put the call back on, and then you'll collect, you know, a lot more credit than you would have putting it on right away, just because it feels so bad buying back a call for a big loss.
Yeah. Oh, dude, even though I knew that I was going to sell the shares immediately, it felt weird ponying up 400 grand to do that. You know, I was like, what the? I'm fucking buying a house right now on the stock market. And what if something screwy happens and the sell button's gone? When I go to sell these shares, this shit tanks to like 50. This is all the crazy shit going on in my head because I hadn't played at these levels before. So this is not an easy situation. So I think definitely having shares unencumbered for me are lessons learned, but also just not having as many shares. So I think that the portfolio for me is morphing into like the 50% allocation is going to be a combination of leaps and shares. And then I always want to be about 50% in cash with using margin as well to sell cash secured puts. Because I can bring in steadier money on cash secured puts. And if shares get put on me, I'm very disciplined about selling a very aggressive cover call on those shares and having them go away because there's no emotion there. Like to me, like when you're wheeling, it's easier to wheel when you haven't owned the shares very long. It's kind of like when American Airlines got called away recently. It was like I don't even think I've looked at where American Airlines is since I sold them at like $13. And I don't even give a shit unless it comes back down to like 11. Then I'm interested again. You know what I mean? Because it was just a wheel stock. So I think the big lesson here, maybe you'll agree as well, Bill, is it's a lot more finicky and delicate to sell covered calls on your long-term holds. Because the number one priority is to keep your shares at all costs. So you've already made a difficult game a little bit harder.
Yeah, I only have 4 long-term holds.
Yeah,
I'm very selective in what I hold. So, now when I start getting trapped, I get a little aggravated on it. Everything else, it's they can take it. I don't care because my bread and butter is the put side as well. So if I'm bringing in a lot of money on the put side, and I get something assigned, I have no problem. I actually want it to go away. Yeah. So it doesn't bother me at all. It's really just my long-term hold. So I'm just contemplating whether or not I should do covered calls on those few stocks, not in general.
Yeah. Yeah. So, I mean, we're all learning still, like this is a game where it's an infinite game. So I think that the knowledge curve is also infinite because a stock can teach you a lot if you let it. You know what I mean? Like Meta taught me a lot. Like now Palantir is teaching me a lot, but I think that the motto, there's a quote that we need, to do my little satisfy the quote of the day is don't forget to earn while you learn. Like you want to get paid tuition, you don't want to pay tuition. And then also don't beat yourself up for making money. Like, dude, I was beating myself up a little bit for like a day. I was almost maybe. I was beating myself up a little bit, thinking I could have played it different, maybe squeezed out another 200. So the question that I always ask myself when I get in these situations is, if I knew on the front end that this is exactly how it was going to play out on day one with Palantir DPO, it was like a 1050, something like that. Would I have been okay with this result? And I got signed right here saying ITJ pledge that it's going to be okay to make, about $1 million. Dude, I would have given you a pretty signature. I would have taken my time, done the comma, pot, and TJ, the whole thing, right? I would have been good with it. So then why am I not good with it now? Because maybe I could have squeezed another 250 if I played things a little differently. So I think that's the other thing. It's just like recently I sold 1.7 Bitcoin at 75,000 and I don't even think about it. I don't even think about it. Why? Because what I've learned about myself is I do not like holding assets where selling covered calls against those assets isn't even an option. So I'm not a hodler.
I think the only time you should ever beat yourself up, and you talk about your physical pen and paper journal pretty often. I think the only time you can beat yourself up is if you go against your written journal, because that journal is supposed to be non-emotional, and that's what you use when you say, okay, if Tesla comes to 200, I'm buying however many shares, and then it comes to 200, and you get cold feet because you think, oh, well, things have changed, and you kind of talked about it, and not following some of the things in your journal. Those are the only things you should, not literally, but like be kind of upset about, because you were able to plan out on pen and paper, what you were going to do, and then you didn't follow what you probably had your best thinking hat on whenever you wrote down in that journal. And so if you don't follow that, that's when you should kind of be upset at yourself. But selling Bitcoin at 75 and then watching it go to 90 is nothing. You felt that was the right decision. So that's all that matters.
Well, I had told myself I wanted to make 20 grand.
Yeah.
And I think I ended up making like 19.6.
Fail.
So the goal was just about achieved. So I was like, I'm done.
That's my exact mentality for this entire Bitcoin run. It's like, what's your price target? And like last week, people were someone was putting in the chat, like, so are they gonna? What do we get to say when I sell or whatever, and then it keeps going up? And it's like, I'm not looking for a number on Bitcoin. I'm looking for life altering cash out of money. I don't care if it keeps going.
Yeah. So this person here, I got options. What he's talking about is a slide that I'm preparing for Wheeler's seminar number 2, and that's called the crystal ball syndrome. So I think that there's a shiny object syndrome that you have to try to cure yourself up on a daily basis. It's kind of like, as a Christian, we have to, it's called crucify the flesh on a daily basis, because we all have our vices that are kind of our go-to moves that kind of get us off our walk. So I think that in the stock market, we have a couple of vices that we got to crucify on a daily basis. And one of them is shiny object syndrome, and the other one is crystal ball syndrome. It's where you look at the results and you're like, oh, I should have played it this way. And I think it's like I say all the time, you don't control prices, but you do control positioning. So it's like, if you're following your methodology and it works more often than not, you're comfortable with it, then you should just keep doing that, because that's the way that you want to run your hamburger stand. Make some tweaks here and there, but don't turn your hamburger stand to the point where it looks like a pizza stand, if that makes sense. And I think that is the biggest lesson that I've learned on this journey so far is my bread and butter is cash secured puts, and I ain't trying to fight it anymore, because I like knowing exactly how much money I'm going to make for the most part. Whereas with covered calls, I feel like I move the goalpost a lot. You know what I'm saying? Like, I move the goalpost a lot. And dude, imagine playing that game of football, Dallas, and Chaz, the kicker's lining up and the freaking goalpost is moving and nobody making that kick. Not even the badass kicker that the Cowboys have. It's the only good player on the team right now. Him and Micah Parsons. Just like, I mean, dude, I'm constantly moving the goalposts. I don't move the goalpost on cash secured puts. When I enter, I know that it's a setup trade, so I'm like at 40 delta. If I get away with it, I'll max up premium. If I really want to own them, or I want to be more conservative as a cash grab, I don't want to monitor, let me go in that 20-25 delta range, call it good, because I don't feel like rolling. I want to take ownership, whatever the case may be, right? Like, it's so much easier for me. It just hits. It's a golf shot that makes sense for me. If I can't play the damn dog leg right, but I'm doing pretty well with the dog leg left, if I can just go play the dog leg left, call it good. Like, I'm just like, dude, life's hard enough. We don't have to make it harder. This game's hard enough. You don't have to insist on playing it a certain way. Like, I think play to your strengths. Like, play to your strength. And dude, selling cash secured puts and managing cash secured puts, there's only a handful of times where I feel like I totally botched it. But on covered calls, I botch it frequently. I mean, just calling a spade. Because on cash secured puts, especially if it's on one of my 5, dude, it's so awesome. I don't even have to look at the technicals anymore. I don't have to do anything. I'm just playing a game called lower my adjusted cost basis. That's it. But on covered calls, it's like kind of damned if I do, damned if I don't, because I want to roll. I'm okay rolling the covered calls for the next 3 to 5 years. But then now that I got into that situation with Palantir, it turns out that I'm really not, because I don't want to sacrifice liquidity. And I just showed y'all that buying back your liquidity is expensive, right? Like, I mean, shit, that was expensive, dude. You got to do the math on that thing. Probably lost 300 grand on those covered calls, if not more. That's a lot of money. That's going to wipe out a couple of years of covered call premiums. It's going to take a while before that will tracker shows anything positive on the call side of things. Unless unless I close out some leaps or something. But I'm just saying, like that line item. You know how like every earnings report on a stock has like that one item that doesn't make a lot of sense. That would be the line item that I would have a hard time explaining on the fucking earnings call. Like when I start talking about that one, it's like you can see the ticker taking like 8%. As soon as I'm trying to justify it, I'm like, give me a second. We're about to talk about cash secured puts. Maybe I can get it to come back up. So it like kind of like when these stocks talk about fucking share-based compensation or something stupid. Like that's kind of what I feel like when I have to keep talking about covered calls. I'm like, dude, I'm going to be more selective. I've learned that from you guys. I'm going to pick my spots, sell covered calls where two things are lined up. The stock is really, really getting overbought. And it's also at levels where like I'm kind of okay trimming the position right here. Because, maybe I want to reallocate the monies somewhere else. You never know, like it's not even that an investment thesis has to change. I think it always comes down to the opportunity cost, because there might be something else that you've had just as high conviction, but then now it just went into a zone and you're like, dude, I want to restructure the portfolio a little bit is all. Like there's all these hedge funds. Dude, Kathy Wood does it all the time, right? She's constantly rebalancing the portfolio. Now, the way she does it doesn't make any sense. I think there's legal parameters that she has to follow as well, which, again, I don't really understand at all, but I'm not privy to that info. Anyway, any other thoughts? And then I want to talk about what's going on with this company here, because we're going to their facilities next week.
Dude,
Yeah, I just want to say that. Go ahead, Dallas.
Is SMCI like worth a shot? I feel like it's worth a shot at these levels, man. Like this thing, I mean, you definitely don't.
Man.
It's definitely
Enron, MCI.
Yeah, it's gonna get delisted.
Luckin Coffee. Yeah. What was the one China? Luckin
Coffee.
Luckin Coffee. No, bro. If I
touch it, bro.
Know that the books
Stay
are
the fuck away.
legitimate, it is not worth a shot.
Dude, that like swing trader in me that is just is screaming like, dude, like just pick up. It could be the trade of the century, if this thing just goes back halfway up. And it's just I've never seen anything like this, like that stock.
I mean, I saw something about export controls, like they were exporting shit they shouldn't to China and things like that. So if something like that actually gets proven, or they go to court for it, or I mean, that's a big lawsuit, and they'll probably get wiped out or have to
pay a huge
fine or get delisted.
Save at me the other day, because there was like a merger back on the table. I think Save is Spirit Airlines or something like that, dude. And then I like put it on my radar for a hot minute, and then I think it tanked like 60% after that, because maybe these merger talks got. I'm just, what's that old saying? When people show you who they are, you should believe them. You know what I mean? Like, I don't know. I mean, I don't
know.
Dallas, I was in public accounting, man. Yeah. These accounting firms don't walk away from a client like that. Something's up.
Yeah.
Something is seriously up. I mean,
and it was a legit accounting firm that walked away, right? Like this was not
big Ernst & Young. Yeah. Yeah, that's a good point. Yeah, they I mean, that's like saying no to money, right? Like walking away is like, yeah.
Dude, but if any little bit of good news comes out, this thing's going up like 50% in a day. Like, you know how many people are waiting to buy this stock because they're seeing what's going on.
Dallas, I haven't listened to you about covered calls for about a year now. You know what? You're probably right. I think you should buy some calls on SMC. I think you should do it. No, but it's.
You didn't listen to me about Bitcoin either.
No, I know. I don't like. Hey, I'm not always right. I know I'm not always right. That's I think the one big difference with me. But yeah, you experienced something with your covered calls, and been watching some of your videos, and now I now understand why you've been trying to tell us what I basically just said today about being a little bit more selective, at least on the shares that you really want to own for the long term. And you were doing this thing where I forget what stock it was, but you went up like $1 and you paid a very small debit to throw it out 1 month, and you were still like $20 behind like where the the actual market. I was like, holy shit, this is what he's been dealing with. So you had been living and breathing these situations for a while, and you were trying to warn us of them.
Yeah, I think it's Palantir.
It might have been Palantir, yeah.
But finally, I mean,
$20.
I'm in bad shape, but luckily I was buying all along the way up to like $21. So I've got the majority of the position now at like $20 on the covered calls, which sounds bad, but it's like I feel like Palantir is like gonna pull back to like $45 maybe, and then I have some calls at like 35 and some more at like low 30s, I think. So that's been but I've been rolling that one since 12 for like a year and a half, 2 years.
Yeah.
So yeah, it sucks. I've been a lot more patient recently, and it's helped me. I mean, I was able to just put on some 350 covered calls on Tesla, and it's like a breath of fresh air, man. I mean, it feels so good,
I was trading at 360 a couple days ago.
You want to squeeze in another teaching segment?
Yeah.
I got one lined up for you guys if y'all are interested. This is the largest backstop trade that I've ever done. And this is TSLL. So there's 2,500 of these guys. This is an agreement to buy whatever 2,500 is that, 250,000 shares at 573. So it's currently trading way above that. But haven't been in this trade very long. In my journal, I said revisit at 50%. So if 50% has been collected or captured, we're at about 35% right now. It's been as high as 38%. But there's way more than 50% left on the trade. Probably a good idea to lock in the win if there's something else that you feel just as excited about. And you can take, a lot of time off the clock, if you will, just to flip the money faster, if that makes sense. But I've been looking at this one a little bit more, and I was playing with ideas of like maybe I could get super aggressive for December, January on Riot, move all of this money over and capture about 70% of the rest of that money and free up a year of time. So those are the things that I'm kind of considering. Right now, I'm still in the camp of leave it alone because it's the easiest money that's left to capture in the portfolio. But what do you guys say? Been in this trade only since 926.
Well, I'm in the same trade, and I can't find a trade. I'm up even a little bit more. I think I'm up like 46%, and I can't find a better trade.
Yeah, you can't find a better risk reward.
A better risk reward where I'm going to collect more premium than it would cost me to close this one out right now.
Yeah. So there's that. What about you, Dallas? I mean, are you just leaving it alone and letting it print money? Because I feel like I got a money printer here that says I can still milk 217,500.
Yeah, I mean, just the euphoria, the Trump pump that Elon's got going right now. I mean, he just put him, basically gave him a side job in his cabinet today or yesterday. And it's like, I think the Trump pump is real right now. And so, I mean, how many contracts do you have?
2,500.
Oh, man. I mean, I don't know. I think
I'm just saying the sizing is what makes it a little.
I can't wrap my mind around that many contracts. Like maybe take off like 20% of them. I don't know. I mean, nothing wrong with we are. I mean, if someone told you Tesla's going to be like pushing 350 a month ago, you would have been like, you wouldn't have believed it. So I think now that we're here, it's like, God gives and God takes away, man. I mean, nothing wrong with giving.
Book of Job, baby, the Book of Job. The Lord give it, the Lord take it.
But Dallas, I mean, what Tesla would have to go to for TSLL to hit that strike?
Probably about 160.
It's such easy money, and I can't find that amount of premium anywhere else right now.
Yeah,
without taking on like significantly more risk.
Yeah, that's a good point. I mean,
so to piggyback on Bill's point, and maybe Chaz wants to chime in. Let's say this does tank, and TSLL now goes to like $7 or $8, and you're feeling a little bit of pressure, right? A little hot under the collar. but it's like a year from now. That's probably the best case scenario, believe it or not, because now I can put the trade on again and bring on another 350,000 to the fold and maybe lower the strike price from 573 to 473, because that's how this thing rolls. And I was like, so now it's like there's 20% of the portfolio or 15% of the portfolio that I don't have to really do shit with.
Yeah.
It's kind of managing itself, and that's kind of the theme, right? Is to like work less and make more. That's the American dream. It's not a white house, it's not a big house and a white picket fence. It's to work a little and make a lot. So I'm just like, I can't find anywhere else where I can make that money and I'm already in enough cash. Like I'm not. I mean, what am I going to do? Just go collect the 4.5? That. What do you call it? Offering Robinhood's offering. I mean,
Yeah.
imagine if I was in y'all's brokers where you're getting the money they give you, the interest. What the host call it? The interest money or whatever they pay you on this thing here too. Jesus.
I am doing that. Yeah. Very nice.
Shit.
I can never take advantage of that because I almost never have any cash.
Yeah. So.
I literally have zero.
What about you, Chaz? Are you touching this thing
Like-
or you're letting it print?
Anything like double, triple leverage, man, I don't understand it, so I kind of stay away from it.
Gotcha.
But more power to you. You know, you're in this, you're profitable, so good problem to have.
Yeah, no, it's definitely a positive problem, but I mean, it wasn't that long ago that this thing did go to those levels, you know? So I think that sometimes you do have to take a look at a chart and see what's possible. Because I'll show you a little situation right there. This thing was 519 in April. And that's where I started accumulating some shares. And I recently sold those shares. But I did tell myself, hey, this isn't the kind of thing you want to hold on to long term. So because of the NAV erosion and other things that I don't quite understand. So I do want to, just like I was beating myself up on Palantir here recently, I feel like I did exercise a lot of discipline recently by selling a bunch of shares because I had told myself that they were just trades. I'm not going to turn them into investments. And that's what I did. I sold 25,000 shares of this bad boy at 1943. I sold shares of BITX because I don't think that it's designed to hold long term. And I left a lot of money on the table, but I sold 10,000 shares at 39.20. And then after that I sold more puts, got 12,000 a day later. Gave back, no, I'm sorry, I got 21,000 a day later, 2 or 3 days later, gave back 12,000, so locked in a little bit more money, a little parting gift, and I haven't revisited it since because I was like, I feel like I got too much exposure to Bitcoin via Riot because the Riot position is so big, and then I was able to cut out CrowdStrike, I was able to cut out Nvidia, very very high conviction stocks. But I'm saying they're high conviction, but my actions said otherwise because when Nvidia went down to $100 recently, I didn't load the boat. And the journal said load the boat at 100. When CrowdStrike was going through all the crap as a Delta, I had a load the boat opportunity. So I think that you got to look at your actions because those really tell you where you stand with that stock. I just don't understand CrowdStrike enough to make it a big position unless I could get it back at like 150 like it was, you know, not too long ago. So I was like, okay, well, it's not gonna be you know, find my Fab Five. I just moved on, dude, and I cleaned up the portfolio. I turned all the Neo shares into long calls and called life good over there. So now I got another year to see if Neo can figure out if they can eliminate their shiny object syndrome. Because there's one thing wrong with that company is I think they can't figure out what kind of hamburger stand they want to be. You know, it's like they're trying to do everything, and I think that you can do anything in life, but you can't be everything at once. Only he can. So it's just I think that Neo suffers big time from shiny object syndrome, and I don't think that they have figured it out. Maybe they got a management issue. I'm not sure, but I'm more comfortable controlling a lot of shares for a fraction of the cost with the long calls versus owning the shares at this point. Anyway, go ahead.
I've looked at, I've kind of been on and off the Neo boat for a while, like since IPO. I actually day traded on IPO. It's a funny thing. And I've seen it go up like 20, 30, 40% after the Q4 earnings, usually like between Christmas and New Year. So
Yeah.
just saying, you could be sitting on a gold mine. But again, it's more technical than fundamental. So,
Yeah.
and to Dallas's point, like what is for the TSLL? I mean, you could cut half of it, take profits on half, and let the other half ride. You could do something like that.
Yeah, so what I'm looking to do is if Amazon or Riot were to have like a temporary setback, maybe I don't know dilution or anything that they could do, like I would actually welcome that a little bit right now because I wanted to get to 150,000 shares. Like if it could give me like another $8 entry point, I'd love to load up 40,000 shares over there. So I'm just looking at the 8, and if something happens there, because I might also be getting into a lot more cash because I've also learned, I've just been learning a lot about myself here recently, and Intel isn't super, super, super high conviction for how big the position is. So I got these cover calls over here at $28, and I would be like legit profitable on this position finally after being down a couple $100,000 at one point. I'd probably be okay getting that back into cash because I can make a lot more money easier by selling cash secured puts with that money and not being in another turnaround play because I tend to gravitate towards turnaround plays. That's why I have open cash secured puts on both. And then also the other biggest thing that I've done, because I was beating myself up earlier, so now I want to give myself a little credit. This is the best trade that I've made all year, and that was cutting Infix. This portfolio looks a lot different, guys, a lot different. If on July the 16th, I hadn't, this ended up being another tax harvest. We'll talk about that in a second. But if on July the 16th, I hadn't sold 11,000 shares at 115.76, you're talking about $600,000 to the no bueno there. That I would be down on those shares even more. The average cost on those shares was like 138, 139. And then before I did that, I kind of did the Palantir thing. I bought calls to maintain some exposure, so that was 221. And I sold those long calls for 47.5. So took another bath on those, and then I took a bath on cash secured puts. So essentially, what I'm showing y'all is the biggest tax harvest in my career as well because I needed it, and I didn't see any light at the end of the tunnel with this company right now that doesn't look like a train. Yeah, so with this administration and everything, and I've heard, and I went and I listened to conversations that Donald Trump has had about solar and about like the environment and stuff, and this dude really isn't about it. So I just don't think that this kind of stuff, like incentivizing buying solar, I just don't think it's going to be at the top of mind for this administration. So luckily the world's big, and Enphase does business in other parts of the world. So they have verticals there that they have levers that they can pull on. So I don't think Enphase is dead or anything, but I thought that it was a pretty good calculated risk to cut all ties with the company, go through my 30-day sabbatical, my probationary period. I think I'm on like day 3 right now. And then it'd be real nice if it had a 5 in front of it.
Would you get back into it if it did?
Huh?
Would you get back into it with some leaps if it had a 5 in front of it?
I'd sell puts. And I'd probably dabble with like 50 leaps, sure. and lottery leaps at that at like 75 bucks.
The premiums are so good, man. I feel like at that level, I mean, it's worth it. It's worth it in my opinion.
No, I think it's a very good calculated gamble, but I gotta I gotta do my time, right? Like I'm in solitary confinement right now with this stock, so I'm trying to not even look at it.
That's why you gotta have another account.
I thought about, could I pull it off in another brokerage? I thought about that.
You can.
Because you did something shady like that, right?
It's not shady. It's just smart.
It is shady, dude. What are you talking about? It's 100% shady. It's tied to your social.
Well,
I mean, if they dig, they're archaeologists. They'll find that stuff.
The broker gives you a statement, and you're supposed to abide by that statement.
Yeah, that brokerage.
Exactly. No,
The sad
I'm
part-
on Dallas. I'm on your team on this one.
The sad part is, if I ever do get audited, it'll probably be this coming year. So they'll find it. If any time, it's gonna be this year. I'm like, whoa, this is a whole bunch of capital gains coming in. We gotta take a look at this. And they find some problem with Celsius, what I was doing with Celsius, which didn't pay off anyway.
Yeah, so interesting. What is your prediction for Riot by the end of next year? Probably in the high 20s. They've printed a lot of shares, guys. They've done a lot of dilution and stuff, but we are going to the facility. I think we're having a tour with the CEO and a couple of other folks on Wednesday, and so I'll get more questions answered because he did me a solid. He talked to my wife and I for like 45 minutes whenever we went over to Irvine a few weeks ago. And then I reached out to investor relations and I was like, hey, I'd love to do a formal tour of y'all's facilities and I want to be able to go live and whatnot. Like, like just to, to get more information for the viewers here. Because there's a lot of people that are in the channel and we have a lot of shares collectively of Riot. Like I was actually adding them up. Do y'all know how many shares of Riot Wheel Deal Nation owns and controls? Do y'all have an idea? Do y'all want to throw some guesses? Now, I'm only doing it based on the members from FaceTimes. So from that, I'm going to add like another 25% at least.
1 million.
Yeah, over 2. Over 2. Between the family office, personal, hedge fund, buttons that I can push personally, 4 million. So it's small, relatively speaking, to the huge ass float. That is right. But it's a lot. There's a lot of riotards out there, guys. There's a lot of rioters out there, man. There's a lot of rioters out there.
Hey, TJ,
They
I
better
got
fly you in first class and comp your hotels and all that.
Sorry, what was that?
see you, Dallas.
I said they better fly you in.
See you, Chess.
See you, better fly you in first class and all.
No, not at all, dude. We go on our own dime. My wife is going with me on this journey because I want to learn. I've never done a deep dive like this on a company. And I want to really learn everything that I can about Riot. In fact, I'm looking to put together a Riot, not a weekly, but a Riot bi-weekly, to like really, really dig into the numbers and learn how to do it, because that is not my forte. Like my forte is to take a ticker, see if the story's good, the fundamentals are good, look at the technicals a little bit, look at the premiums, the options change. That's where I live. And I'm like, right away, do I think I can manufacture the win? And I usually get to a yes pretty quickly when everything lines up. That's what I do in the market. But I want to go outside of my sphere of competence and confidence. And I want Riot to be my guinea pig because I just happen to be the most interested in the Bitcoin space. And I'm very unfamiliar with it. And I want to really understand how the hell this company functions. I want to see where they're at with this whole HPC AI computing deal. Like, I just want to learn every detail that I can about the company because I just happen to be interested. And then obviously I've made a lot of money with it, so I do have a dog in the fight, horse in the race, if you will. So I want to go through that journey, and I'm going to take the channel with me. There's going to be like a 10, 15-minute due diligence segment on Riot daily, and just like trying to understand the metrics, the finances, where do they really stand with the money? It says they got about $400 million. Where did it all come from? Like, let's really understand the story, because the company's been around for a minute and it's exchanged leadership hands and stuff. So usually when a new leader comes in town, like a new coach comes into town, the organization tends to start looking a little bit different. So I just want to go from the genesis of the company, who they were, what they are today, and what are they hoping to become in the next 5 to 10 years. I'm just very interested. And I think that it could be a good learning lesson for everyone. And just to see. And it's a very compelling company. It's a very compelling space, right? It's a very, very compelling space. And because there's like people that know a lot about Bitcoin miners, but they're all over the place. They try to study like 20 of these that are publicly traded or whatever. I'm like, I just want to learn about this one. I'm familiar with the others, but I'm talking about like I really want to learn everything that this company's got going on that is public information anyway. So it's not like I'm going over there and being like, hey, Jason, what can you tell me that you're not supposed to tell me? You're not doing anything like that. I was like, dude, I'm just learning where I can go find this information because it's there to be had. That guy Sebastian has beautiful spreadsheets that I subscribe to. Highly recommend his channel for the spreadsheets. It's like $4 a month. And he's got like all these freaking metrics there. Visual Stocks has a bunch of metrics like their exahash, what they're mining, what they're bringing in, all this shit, dude, everything. And I'm really trying to understand like how their share-based compensation package works out. And Jason did an interview recently on another channel, and he's talked about it, how like the stock performance is directly tied to his compensation package. And I think these metrics are for like 2025, 2026, something like that. And it has to hit certain levels, very Anthony Noto like. And that's stuff that I didn't know. So again, it's like you listen to all the interviews, you do a little bit of digging, read the articles, read what people that don't like Jason and company have to say. Like you have to be willing to look at both sides of the story as well, right? Because now you can get like a confirmation bias, and I think that's dangerous as well. So I'm going to go on this journey, man, and I hope that you guys will appreciate that information. And I want to get the channel to the point to where maybe Jason's willing to come on for 10 or 15 minutes. But we got to be able to bring on, the viewers, right? Because I mean, it's I don't think 100 viewers on the YouTube side is going to cut the mustard, but if we can get him 200 or 300 viewers on a live, I think maybe that is worth 5 or 10 minutes at a time, because there is a lot of money that watches this channel. It's not just about me having a decent portfolio. It's about there's a lot. I mean, Dallas isn't broke. I mean, my goodness, have y'all seen this channel? How old are you, Dallas?
29.
Dude, how many 29-year-olds do y'all know that are one double away from having $1 million in the market? But those are the kind of folks that follow this channel, and they're on their own journey. They're not just watching mine. They're in the race. They're running their race. Most of the folks in the chat, they're legitimate investors. They're not just here for entertainment, bro. You really think you can listen to me for entertainment? like they're trying to figure out how to make money too. That's the thing. It's crazy. Yeah, Dallas in the top 2%. He's 29 years old, 20 years younger than me. He's probably, if we were running a mile, like at that age, like I'm probably still on the first curve of the first lap, and this dude's already on like lap 2. He's already like lapped me essentially at that age. Like I hadn't even figured it out that now I was already a dad at the age of 29. Jeremiah was 4 years old. My daughter was a year away from being born. So it's just, just kind of like keep that in perspective as well, like how far ahead Dallas is, you have little Alex in the channel that's barely turning 21. And this dude's a degenerate gambler. He buys a bunch of leaps, little Alex. And he's just keeps killing it with these long calls.
Hey,
So
TJ, speaking of Riot, I think a lot of people, you were just mentioning how many people own Riot. I think I don't personally own Riot. But I think a lot of the chat would maybe enjoy your perspective on, I subscribe until it proves me wrong, until it does something different. I subscribe to the Bitcoin 4-year cycle theory. So we're heading into the final year of the 4-year cycle,
right.
which according if that plays true again for the 4th or 5th time, we're going to see a big leg down sometime in 2025. It's kind of whether it's the middle or kind of whether the end. So I think the audience would like to enjoy your perspective on, like with Riot. I mean, it's gone from like 6 something to 16. It was recently at 16 in only a few months. And let's say you bought, a decent amount of shares at 6, and you're like, okay, I'm gonna sell cover calls at 8. Well, now you're feeling pretty bad, right? And those shares are probably never coming back. I think the audience would maybe like to hear, what are your plans? Do you plan on selling Riot next year? Are you going to hold some, sell some? Are you being a little bit more cautious with some portion of your shares as far as calls, because you have in your mind, like, I know I'm going to let this go in the next 12 months or so? Kind of just your thought process with Riot over the next 12 months.
Yeah, for sure. So in my journal, I do have the answer to that question, but this was before I decided to do the deep dive in the company, right? Because Riot was an investment, but it wasn't like a ride or die investment at the time. You know what I mean? It was just like, I'm in such a good spot because we've sold so many puts and calls over the last 4 years. So I've been in this thing since 2020. So what I had told myself in the journal was that I wanted to exit all of these shares at $20. So this is it, right? That's why I have them at $20 for 2026. But then according to that rainbow chart and all that stuff, Riot could very easily be at $4 or $5 or $6 by this time. We don't know, right? That's the thing. We don't have the crystal ball. But I've got all of the shares for sale at 1,100. In about 3 months, depending on what's going on with the stock, you want some time to run off the clock. And I want to bring these back into like June of 2025, even if I do so for a bit of a debit, because I want to take a little bit more control of the position. And I'm going to continue to sell cash secured puts indefinitely on Riot. But the one thing that I am going to do differently on any next, what's crypto winter, I think is the terminology, Dallas, that is used for the bear market in Bitcoin, right? The crypto winter.
Yeah.
Is I want to go long with leaps as well. Like I want to buy leaps 2 years in the distance, and I want to leave those unencumbered.
Yeah.
That way I can be in a situation where I look up and I'm like a 300-400%, because I want to log some major wins along the way. And if I can figure it out, because I've been making a crap load of money on cash secured puts. So if I can get my adjusted cost basis to like -$3 or $4 come the next crypto winter, and the portfolio is in a really good spot, I may just let like at least half of these shares ride, or to like 50,000 of them. Be like, hey, these are my ride or dies. I don't care, because I feel like they're going places. I think that it's not just going to be Bitcoin. I think it's going to be HPC AI as well. But I don't have the answers to that yet because I haven't done all the homework. And I don't think that Riot has the answers to that yet. But I do know for a fact, because I heard from the horse's mouth, Jason himself, that they are entertaining those offers. And if they make dollars and cents, they're not going to turn a blind eye to it. So they're in a position to potentially have somebody cut them a $6, $7, $8 billion check. Dude, what's that going to do to the share price? You know what I mean? So I'm going to be very careful with those covered calls. And I am treating those covered calls like a hedge. And I've already got it in the journal that I am willing to lose $100,000 on those covered calls to have all the crazy upside the minute somebody wants to stroke a check and say, hey, Corsicana is no longer Bitcoin, it's HPC AI or Rockdale, however they do it, or they just pivot the entire company. Because that infrastructure change, the little that I know about it, would cost a lot more money than finishing building out to do Bitcoin mining. So they have to get paid a big amount of money up front, and it has to be a contract for like several years. Because what they're after with these Bitcoin miners is their power strategies, like their infrastructure, the way that they're set up with their with the electricity situation, right? The power. That's where the appeal is for these other companies that have a lot bigger pockets than these miners. Because I've been doing homework on these miners since 2020, guys, and I will tell you one thing: each and every one of these miners has been undercapitalized from day one. They remind me a lot of people trying to sell options with a $20,000 portfolio. You're already behind the eight ball because you're just undercapitalized. So it's like they struggle. They have to dilute. Some of them have like pawned their Bitcoin, so to speak, to go get money and do all kinds of shit. So now they have, encumbered Bitcoin, like a Marathon's done it a couple of times. I don't know if Riot's ever been in that situation. But there's now loans available against your Bitcoin hodl that the terms are starting to get a little bit favorable. I know that that's something that Riot might entertain as well, but that's not anything that they necessarily want to do. At least that's not the feeling that I got. There was a gentleman, Ben, that was talking about it a little bit, and Jason and this other guy, Phil, was talking about these types of things. So again, it's like I want to be able to learn all of those things, and the only way to do that is you got to be willing to do the research.
Yeah,
and the
that's
fact
a really good idea.
proximity to me geographically, like, dude, I'm gonna be able to go touch and feel, and it's gonna feel very real to me. And I'm gonna be like, dude, because I've already seen it. You know what I mean? But now I'm gonna like really be able to walk, side by side with Jason. I mean, there's not going to be a better seat in the house that I'll ever have to be able to go do that tour and to see it from their eyes, from the brass tacks of the company. So I think that it's a pretty awesome opportunity. I got my beautiful wife going with me, a freaking Stanford grad economics degree. So she's going to be looking at this thing with a different set of eyes than I do. And then we're going to get back in the van, and then we fly home that night, and we'll be talking about it and the plane. And we're going to be like, hey, this thing looked really, really legit when we're in Irvine. Like, this does not feel like a fly-by-night operation by any stretch, dude. Like, the office building and everything they have, like, dude, they ain't closing the doors anytime soon. And it's like when we see how massive this facility is and how everything looks, like, how the ducks, are lining up and stuff, I think it's going to be pretty impressive. That's my expectation anyway. We'll see, right? I haven't, we'll see. And I'm hoping that they'll let me capture a few videos here and there. I don't want the bodyguards to take us out. I mean, a long ass Uber ride from Corsicana to Dallas, you know what I mean? Because we're going to be in one of their vans or whatever. So anyway, any last parting words, man? I got to go. I want to go spend time with Kristen.
No, I love that idea, what you just kind of laid out there, as far as taking back control of them at some time. And yeah, I had another thought, but it's kind of a longer one, so I'll just keep that until next time.
Sure. Chaz, any parting words, man? Absolute pleasure having you on the channel.
Yeah, thanks for having me. I've been learning quite a bit. So hopefully the bull market keeps raging and we keep making money and this year on a positive note. So
yeah, if there's any last words that I would like to have for this episode of Wheelers is don't ever be ashamed to take a profit, regardless of how big or small. Profit's profit. And if it's a big win, because this is one of the biggest wins of my career, is you got to feel like the dude from Breaking Bad and be like, we won. I won. We won. And there's nothing wrong with that. And it could have potentially been a much bigger win down the road. But we did the best we had. We did the best with the information that we had in hand at the time. And if we could have scripted it this way from the very beginning, we would have been okay with it. So Riot has taught me a lot of things, but the biggest thing that it taught me was that I am pretty cured of crystal ball syndrome. Like I'm not really beating myself up that much because I'm so damn excited about all the other cash secured puts that I'm babysitting. I feel like I finally got something to do again. You know what I mean? Like the channel's exciting because I gotta tell y'all why I thought it was a good idea to sell puts on SOXL, and I don't even know that much about damn semiconductors. So I've been frantically studying AMD and NVIDIA, and like I don't even know what all companies comprise this damn ETF that I'm in now all of a sudden. So like life got exciting, you know it is like that new ticker that's your little shiny object, right? It's exciting. It's exciting, but I'm real excited to be selling a lot of puts on SOXL at these prices. I've been following the ticker for a while. I've got Boeing that I'm babysitting, but I'm playing that one. They did like my acquisition price target is 145. I've already rolled these to March. At 145. I'm sorry, my price it's 140. I was at 150 and I already went to 145. Like I ain't even playing with it. Like I'm gonna go put the cash puts over there. I just got one more time, but this thing keeps tanking. Now I'm gonna take ownership of some Boeing and 140 and hope they can keep the doors on the top. You know, like I'm just very interested in the company. It was my number one swing trade in 2020. And I like the company. I like that they work, they have defense contracts with the government. I just feel like it's Americana, dude. Like it's Boeing, dude. It's a very important company for this country. And I like those kinds of companies. They gotta get their shit together though. Like that,
Yeah.
And I don't know that it's an easy task. I don't know that it's an easy task. I think Intel is a very important company for this country. So that there's also those are, it's like kind of like showing a little bit of like my patriotism or whatever, but that can't be a reason to be invested in the company either. But I'm just saying, I just happen to be very big fans of those companies because I think that America does need a winner in that space, somebody that's competing, because I think it's dangerous not to be in that space, and I think it's really, really dangerous not to be very, very competitive in that space. So I think Intel is important, dude, and I think that the government is competitive as hell. So I think that they're going to do everything that they can to help Intel win. This is my generic investment thesis. Make of it what you will, but that's how I feel about it. Anyway, guys, I got to run. TJ the Will Deal signing off as always with Dallas Matthew, Chaz, Bill White. Appreciate you earlier. I love that, Dallas. Make sure to follow Dallas's channel, exploring my options, and then hopefully maybe next week, Dallas, we can do the interview on your channel if you're available. Yeah. As always, sky stay blue, stock screen. Peace out. God bless you guys.
See you, man.
Thanks, guys.
Take care, Dallas. Appreciate you, Chaz. Y'all take care.